while the news tells you the economy is fine. The people who own the economy are quietly running for the exits. In the last 6 months, a strange pattern has emerged. The ultra-wealthy aren't buying stocks. They aren't buying real estate. They are buying this. And they are doing it in secret. Today we expose the silent sell-off and what it means for your money. You might think silver is just jewelry. You might think it's the poor man's gold. That is exactly what they want you to think. Because while the retail investor, the average guy with a 401k, is being told to buy the S&P 500 at all-time highs, the smart money is doing something completely different. They are draining the physical vaults of London and New York. This isn't speculation. We have the data. We have tracked the flight of capital from paper assets into hard assets, and the numbers are terrifying. We are witnessing the early stages of a global silver squeeze that makes the GameStop event look like a child's tea party. But this time, it's not Reddit traders squeezing a hedge fund. It is sovereign nations and billionaires, squeezing the entire global supply chain. By the end of this video, you will understand the 3 critical signals that prove the great wealth transfer has already begun. Signal number 1 is a ghost from the past who has returned to the market. Signal number 2 is a country that just swallowed 25% of the world's supply. And signal number 3 is the mathematical impossibility that is about to hit the tech sector. If you hold dollars, stocks, or bonds, you need to watch this. Because the window to act, to understand what is happening right now in 2026, we have to go back to 1997. In 1997, the world economy was booming. The dot-com bubble was inflating. Everyone was getting rich on tech stocks. But one man was sitting in Omaha, Nebraska, quietly reading reports on supply and demand. Warren Buffett, the Oracle of Omaha. Buffett is famous for hating gold. He calls it a useless cube that just stares at you. But he doesn't hate silver. Why? Because silver does something. It is an industrial metal. It is consumed. In 1997, Buffett realized that the world was consuming more silver than it was mining. The stockpiles were dropping. So, without telling a soul, he started buying. He bought 129 million ounces of silver. He literally cornered the global market. When the news finally broke in 1998, the price of silver exploded. He made a fortune, but more importantly, he proved that the physical market was tight. Now, fast forward to today. Rumors are swirling on Wall Street that the Buffett signal is flashing again. We are seeing massive, anonymous purchases in the silver market that fit his exact fingerprint. But whether it is Buffett or another titan, the logic is the same. The setup today is exactly the same as 1997, but 10 times worse. Back then, we had photography demanding silver. Today, we have something much hungrier. Solar panels, electric vehicles, AI data centers, Tomahawk missiles. They all need silver. You cannot build the modern world without it. And just like in 1997, the above-ground stockpiles are gone. The billionaires see this. They know that if they try to buy $1 billion of silver next year, there won't be any left. So they are buying it now. They are front-running the shortage. But they aren't the biggest player in the room anymore. There is a new whale in the market, and it is not a person. It is a nation. If you want to know where all the silver is going, look at the shipping manifests heading to India. In 2024 and 2025, India did something that shocked the commodities world. They imported nearly 6,000 metric tons of silver in a single year. Let me put that into perspective for you. That is roughly 25% of the entire planet's annual mining supply. One country, buying 1/4 of everything we dig out of the ground. Why? Because the Indian people and the Indian billionaires know something that the West has forgotten. They know that paper currency is a promise, but silver is payment. In India, they are seeing the rupee fluctuate. They are seeing inflation, so they are converting their labor into metal. But it's not just jewelry demand, it's industrial. India is building massive solar parks. They are building electronics factories to compete with China. They need the physical metal to build their future economy. This is the silent sell-off in action. While American investors are arguing about whether Nvidia stock is too high, Indian billionaires are taking delivery of physical bars. They are draining the LBMA, the London Bullion Market Association. The vaults in London are bleeding silver. The vaults in New York's COMEX are bleeding silver. For the last 3 years, we have seen a consistent drawdown. The metal is leaving the West and moving east. And once it goes into a private vault in Mumbai or a factory in Shenzhen, it is gone. It is not coming back to the market. This creates a massive problem for the price discovery mechanism. Right now, the spot price of silver you see on TV is determined by trading paper contracts in New York. It's a digital game, but the physical reality is determined by how many ounces are actually in the vault. When the vault is empty, the paper price becomes irrelevant, and we are getting dangerously close to empty. Let's look at the hard numbers. This is where the silent sell-off turns into a loud crisis. For the last 5 years consecutively, 2021 through 2025, the silver market has been in a structural deficit. That means we consume more than we mine. In 2025 alone, the deficit was projected to be over 200 million ounces. How do you survive a deficit? You eat into your savings, you drain the above-ground stockpiles, but you can only do that for so long. Here is the math problem that the billionaires have solved. Mining supply is flat. Actually, it's worse than flat. It's declining. Most silver is a byproduct of mining for lead, zinc, and copper. You don't just open a silver mine overnight. It takes 10 years to get a permit and build a mine. So supply is capped. We cannot produce more. But demand? Demand is exponential. The green energy transition is legally mandated by governments around the world. To hit the net zero targets by 2030 or 2050, we need to build millions of solar panels. Scientists estimate that by 2030, the solar industry alone could consume 20% to 30% of the entire silver supply. Then add in the AI revolution. Every high-performance chip, every server rack, every complex circuit board requires silver because it is the most conductive metal on the periodic table. You cannot replace it. Copper is too slow. Gold is too expensive. Silver is the only option. So you have capped supply colliding with exponential demand. And right in the middle, you have the investment demand. This is the X factor. If just 1% of the money sitting in bonds or stocks decides to move into silver as a hedge against inflation, there isn't enough silver in the world to satisfy it. Not even close. The entire silver market is tiny. It's a fraction of the size of the gold market. If Apple decided to put 5% of its cash pile into silver, it would buy the entire annual supply. That is how small the door is. And everyone is trying to run through it at the same time. So, why is the price not $100 yet? Why is silver still trading at a level that feels cheap? This is the most common question I get. If there is a shortage, why isn't the price skyrocketing? The answer is, it is the calm before the storm. The paper markets are suppressing the price, which allows the big players, the billionaires, and the nations to accumulate more. This is the accumulation phase. They want the price to stay low while they fill their warehouses. They are buying the physical metal while the price is suppressed by paper derivatives. But this game has a limit. The limit is force majeure. That is the moment when a major industrial buyer, like a Tesla or a Samsung, calls the COMEX and says, "I need 10 million ounces for my factory," and the COMEX says, "We don't have it." That is the moment the game breaks. That is the moment the price decouples from reality. And the people who are buying now, during the silent sell-off, are positioning themselves for that exact moment.
They are trading fiat currency which is being printed into infinity for a strategic asset that is disappearing. It is the ultimate asymmetric bet. If they are wrong, they own a pile of useful metal that will always have value. If they are right, they own the most critical resource of the digital age during a supply collapse. So, what does this mean for you? You don't have to be a billionaire to participate in this wealth transfer, but you do have to be early. The silent sell-off is almost over. It is about to become loud. When the headlines on CNBC change from stock market rally to silver shortage, it will be too late. The premiums will skyrocket. The physical metal will vanish from local dealers. You will be stuck on a wait list. This is not financial advice, but it is a financial reality check. The people who own the system are betting against the system. They are selling the paper assets that depend on stability and buying the hard assets that survive chaos. They are telling you one thing with their news channels, but doing another thing with their wallets. Watch what they do, not what they say. The pattern is clear. The deficit is real. The stockpiles are empty. The silent sell-off is the loudest warning signal you will ever get. Are you listening? If you want to know exactly how to buy silver without getting ripped off by premiums or which specific silver stocks the insiders are buying right now, you need to be paying attention. We are going to be tracking the whale wallets every single week on this channel. We are going to show you the data that Wall Street hides behind a paywall. But you have to be subscribed to see it. Don't let the billionaires be the only ones who make it to the lifeboat. Hit that subscribe button. Turn on notifications. Because the great wealth transfer isn't coming. It's here. I'll see you in the next video.